And guess what? If you cut the balance in half, you cut your interest cost in half. You don't have to chase an interest rate to save interest. You chase the balance because the balance is what's costing you the money, not the interest rate.
Hey, everybody. Welcome back to another episode of the Richer Geek Podcast. Today we have Bill Westrom. He's the co-founder and CEO of TruthEquity.com. He's the architect behind Credit Line Banking, a revolutionary banking strategy that's changing how Americans save, invest, and pay off debt. He has 30 years of banking and lending experience. He knows firsthand how traditional financial system is failing families. We're going to get into that. And he is set out to fix it. His mission is simple: empower everyday Americans with the tools and strategies banks used to stay ahead. His innovative approach has helped families pay off debt up to 4 times faster, turning financial stress, we all have that, into clarity and control. How you doing, Bill?
Doing great, sir. How are you today?
Doing great, yeah. Staying warm, we're just living life. Can't complain. No one cares. And so I just do my thing. So before we start the podcast off and get into the nitty gritty, tell us a little bit about who Bill is and how did you get involved in what you do now?
Well, we got to go back a long ways, almost 30 years. 1996, I actually did a headhunter a favor and went on a job interview for a mortgage broker job. I owned a mortgage, but I didn't know anything about the business. I just doing my buddy a favor. And I ended up getting the job and became a mortgage broker. Fast forward about 4 or 5 years later, Australian bank introduced this unique new mortgage strategy, which I built my business around from that. But that was back in 2001, 2002. In 2005, I went to work for that bank. They figured I was a pretty smart guy, so they hired me there. But I realized real quickly I was going to starve to death because relying on brokers to make my living wasn't going to happen. And so I did grab a broker that did get the strategy, and he and I shook hands in 2006, and Truth and Equity was born. So we're working on our 19th year, teaching people how to bank and borrow smarter so they can save more, stress less, and like you said, pay off debt up to 4 times faster if that's what they want to do. They can use it for investments too.
Well, yeah, I mean, so let's talk a little bit about that, because here's what America is all about: is spend, debt. I look at rest of the world. They tend to save more, and we have too many commercials that say buy this $800 thing, buy this $100,000 car. So, I mean, what are we doing wrong? What does that lifestyle tell us?
Well, to be honest with you, we're not doing anything wrong as far as I'm concerned. If you look at the debt situation, we owe $18 trillion in consumer debt. $12 trillion of that is mortgage debt, which is good debt, because you got an asset there. You just have an encumbered asset. So the other $6 trillion, cars, student loans, et cetera, that's just living our lives.
Yeah.
Right. And why, our debt's gone up about $8 trillion since 2012, after the bubble popped and we had our recovery, and rates have risen the whole way.
Mm-hmm.
Right. And people say, oh my God, but what that tells me, we're really good consumers.
Yeah.
That's what we're supposed to do, because you can't live in this country without debt. You won't have an education, you don't get a car, and you don't get a house. And then if you look at the cost of living, forget the eggs and the gas. You and I are close to the same age.
Mm-hmm.
Our parents, the only thing they had to spend money on to communicate and entertain us was electricity for a TV and a phone on the wall.
Mm-hmm.
If you look at people's budgets now, you cannot communicate, cannot entertain yourself without paying somebody. And this will blow your mind. $400, $350 to $400 is the average monthly expenditures for an American to have a cell phone, a TV, with cable or streaming, and our Spotify's and our Netflix and our YouTubes. I mean, you cannot get anything without paying for it, and we didn't have that when we were growing up, right?
Yeah.
And so there's an expense that people, you just, again, how do it's just part of life now. It's expensive to live here now. I mean, that's just, and you can't blame the consumer for being an irresponsible individual. Because if you look at the debt and credit report, I know I'm kind of a geek, that's my Bible, but 660, 80% of the country has a credit score of 660 or better.
Mm-hmm.
Now, 660 isn't great, but that still gets you what you want.
Good. Yeah.
You know what I mean? And the lowest percentage of the population are unlendable, and they're the people that we hear about on the news. But the other 80%, people are getting up. Just look around your own town.
Mm-hmm.
Thousands of people driving cars or going someplace or pushing money into the economy. They're buying food. We're good at what we do. We really are. It's the effects of, I say capitalism, right? Not putting it down, but progression of capitalism. Mm-hmm. Now we got to pay for the YouTubes and Netflixes and et cetera, et cetera. And when we look at the debt problem, well, that's my biggest focus is we continue. It's just like the government. If we continue to add on all this debt, then we're going bankrupt as a country, and we're going to go bankrupt as citizens if we don't have a better model of repaying this debt. And the terms of repayment are causing most of the problems.
Mm-hmm.
You go out and buy a car. Well, average monthly payment on a car is $600 to $750. Right, for the next 6 or 7 years, and then you buy a $400,000 home, $350, which is pretty average. There's $2,500 for without taxes and insurance for 30 years. 30 years. But of course, people don't live in their homes for 30 years. They're refinancing, debt consolidation. Why do they have to refinance to consolidate debt? Because they're doing what they're told.
Yeah.
You know what I mean?
Yeah.
And so it just becomes an endless loop that never gets paid off. And, if we did 8 trillion in 12 years, we're going to do 10 trillion in more debt in another 10 years. And at a certain point, the consumer base is not going to be able to service the debt 100%.
Yeah.
And we're
done. I mean, we can't even pay the interest payment, the government and things like that. So, and, we talk about, and also people are just getting credit cards, paying the monthly payments. And it seems like there's no cap on the interest. I mean, I've seen some at 18%, 20% interest. They're never going to be paying any of that stuff off. It's just the monthly.
Well, you're right. They'll never pay it off if they follow whose terms of repayment?
Mm-hmm.
The banks. And they don't even set it. I mean, people don't even know how that credit card payment is calculated because it's not amortized. You can't put it in an amortization table. So how do they come up with it? It's simply a percentage of the balance. And if rates go from 18 to 22, okay, more interest. So they just have to increase the percentage. So there is some modicum of repayment. Because if the rate goes up and the current payment percentage doesn't cover the new interest, then they have to bump it up.
Mm-hmm.
Okay. And that's how they determine the repayment of a credit card. Well, they're not in the business of helping anybody repay. That's not their business model. You can find millions of people to extend you credit, mortgage brokers, etc. But how many out there are providing a solution to the problem they just sold you? They don't even ask. That's just not their business model. So I'm not putting them down. They're good at what they do.
Yeah.
Right. But it's not their business model. And that's why I've been at this for 19 years, because people need a wingman.
All right. Well, let's talk about the wingman a little bit. How do we take control of our money? What are some of the things that you can tell us to help us?
All right. Well, let's look at what we're doing now. The traditional model. Income goes to a checking account, and we redistribute our income back into the economy. on a 30-day cycle per the due dates, the ink on the paper, right? When's the utilities due, auto draft this, wipe a card there. That's traditional banking. We earn our income, we make our payments. But the banks got a role in it, right? Because our money goes into a checking account and that they take control of the money, right? And they go leverage our income into the asset world to make their money, right? Now, I'm not disparaging the bank. That is their business model. They don't sell food, furniture, shoes to earn their living. They leverage is the key word. They leverage our income, right? Well, when you bring in credit line banking, what I do, if you just look at the money and you look, okay, this is how they make their money, leveraging my income for financial gain. So we can do the same thing. So now we're going to move it to the credit side to the ledger, which is a little unknown for most people. But credit line banking means we're going to bank out of a credit line. So when you get paid, that credit line is going to have a balance in it. Okay. And it could be a credit card, home equity line of credit, unsecured line of credit. We don't even know why the balance is there. We just know if there's a balance, there's interest. The higher the balance, the more interest we pay, right? And so with credit line banking, if you move your income from a checking account into that line of credit, it's considered a payment, correct? It's the only way to, if it goes to a debt, it's a payment. Well, if you push your whole paycheck in there, that's much bigger than the minimum payment, right? Say your $250 payment, 50 went to interest and 200, or 50 went to principal and 200 went to interest. Well, if you put a $5,000 paycheck in there, they still only get $200 in interest. Okay. And the remaining $4,800 knocks your balance down. So if you had a $9,600 balance on the line of credit minus $4,800, you just cut the balance in half. And guess what? If you cut the balance in half, you cut your interest cost in half. You don't have to chase an interest rate to save interest. You chase the balance because the balance is what's costing you the money, not the interest rate. Does that make sense?
Yeah, it's interesting.
All right. Now we use a revolving line of credit because it's got a two-way door, right? Which means you have access to whatever you put into it. So if you put $4,800 in today, you can go get $4,800 tomorrow. So there's liquidity in that line of credit, just like a checking account. And so this is a big thing that's part of my services. We help people establish bill pay day. All right. We move everybody gets paid on one day. Everybody. And why do we do that? So that $4,800 doesn't get touched. So it can suppress that balance and save us interest every day. Does this make sense? And then our money on bill pay day, our money comes back out to the checking account and everybody gets paid. Now, if you notice, we use a checking account to receive deposits. And we use a checking account to pay bills because that's what the rest of the world expects. That's their job, receive income and pay bills. Now, in the meantime, I've replaced the bank. Under normal circumstances, your deposit goes to the bank so they can make money. When you put the line of credit into play like this, you've taken your money out of the bank's hands. They can't make money off your money anymore because you put it into your own vault called the line of credit. They can't go in and get that money. They can't do anything. You have complete ownership of the inflow and the outflow of that line of credit. That's why I call it credit line banking. You've replaced the bank with that line of credit. You start banking in and out of it. And so your income suppresses the balance to save interest, pure leverage right there, just like the bank. And then now, how do we get it paid back? How does the debt get paid back? Well, that's the difference between, Mike, it says your bandwidth is low. I hope you can still hear me.
Yeah, I got you.
Okay. But the payback is the difference between your income and your expenses. And believe it or not, most people have money left over at the end of the month. Most people that don't, it's because of all the debt payments they're having to make.
Mm-hmm.
That's the biggest chunk of money going out the door. And so again, if we put in $4,800 after paying interest, and we pulled $4,000 out for expenses, that leaves us $800 positive cash flow, right? 4,800 in, 4,000 out, 800 difference.
Yeah.
That then, if you started the debt at 96, you'd end the month at 88 because you paid that $800 surplus is the payback. You follow?
Yep.
Now, here's the cool thing about what I do. If you want to calculate, if you know your numbers, if you know what your surplus number is at the end of the month on average, even though it will go up and down, but there is an average. You can take the balance you owe, divided by your average surplus, and that'll tell you exactly how quickly you could pay off that debt. So if you got a calculator, punch in 9,600 divided by 800, and that'll tell you exactly how long it'll take you to pay off that debt. And it works. It's 100% accurate 100% of the time. And this is right. And if you can do this for yourself, you're smarter than the credit card companies, because you can actually tell yourself how quickly you're going to pay this back. They can't tell you anything. You know what I mean?
Yeah.
So again, it's a matter of control. You've taken control away from that bank. You own the debt. You control the repayment. You control the interest cost. And the beauty of the line of credit is once you pay the 9,600 off, guess what? Where is it? It's in the line of credit. You can go use it again.
Yeah.
Like you're into syndication and all that. Here's a way for any of your listeners that want to get into your syndication or get into investing. This is how you can do it, by using other people's money and then just recycling your income. And that line of credit is an endless supply of working capital for as long as you own that line of credit and as long as you're earning an income. It's the most beautiful thing in the world, pal. I got 19 years experience doing this every working day of my life.
Yeah. And I bet there's a lot of people now rewinding to get all that stuff again that you just said, because it's probably blowing a lot of our listeners' minds right now. How do they set this stuff up?
Who's they?
The potential investor or the consumer, like you're talking, line of credits, and, they're going, well, what do I do? Do I go to my bank and set it up, or how do they start this process?
Well, that's my service. That's why I'm the wingman.
Yeah.
Right. I've been in the lab, literally working in the laboratory, in the petri dish with consumers. And it all starts with initial phone call and get the numbers. What do we earn? What do we owe? What do we spend? Now, I've got a full system built. Truthandequity.com is the engine behind credit line banking, because we get those numbers into the system. And this is why I got hired on by the Australian bank. This is why they thought I was a smart guy. In 2005, I wrote an amortization model specifically for this strategy. So when anybody comes through the website, we get those numbers in and we go through that amortization table together. Right. Yeah. So we'll have a Zoom call because I want to show everybody how this works. Here's the money flow. The money's going to go in, go out. Here's our interest rate. Here's the interest cost. And I can project what this will do for that particular individual based on their own budget. And everybody's budget is unique.
Yeah.
You and your neighbor might pay about the same for utilities, but your budget is nowhere even near his.
Yeah.
Right. So everybody's budget is unique. And that's why I've got the one-on-one customization.
Good.
Right? So we can make it since everybody's a little different, depending on stage of life, kids, etc. That's why this thing is so agile and dependable, because again, we're just working with there's no new products out there, regular checking accounts, regular HELOCs. I mean, nothing new. We're just changing the rearranging the use. Right. Yeah. But again, I'm the wingman. If your listeners want to know more, come talk to me, because I can put all this stuff into visuals. And one reason I do this is to protect people from not doing it, that shouldn't be doing it. Even though it sounds great et cetera, et cetera. They're just, depending on budgets and income and where they sit in life, right? I need to protect everybody, including myself, because if I'm taking money from people that I shouldn't, well, my reputation is going to get destroyed and I'll be out of business. So I do it to protect myself as much as I do to protect the consumer.
Yeah. And everybody against Bill Westrom with truthinequity.com. Check it out. Now, there's some people are going to go, hey, this is too good to be true. There's got to be, as soon as someone figures out something this good, there's going to be regulations. There's going to be, the banks are going to get upset. Why, what do you have to tell people that say, this credit line banking's too good?
I've been hearing that a lot for 19 years.
Yeah, sure.
And statistically, most companies go out of business in the first 5 years, correct?
Yep.
In my opinion, those companies go out of business because they have a product the public doesn't want or the public doesn't trust them. Right? Okay, that's within 5 years. I've been here for 19. Right? I got a product that works and people can trust me with their lives. I mean, that's what it's all about, because people are going to pay me a certain amount of money to do something they don't understand with a guy they don't get to shake their hands with.
Yeah.
Right. And I've been making my living like this for 19 years. And if somebody's going to honor and put that kind of trust and faith in me, you become a family member immediately, literally.
Yeah.
You know what I mean? And so, too good to be true, I understand, but so was, wall-to-wall carpet was too good to be true. Right?
The microwave oven, it's like, no, there's no way that you can do that.
We got phones on our wrists.
Yeah.
Right? Dick Tracy, 1958 was that comic.
Isn't that crazy?
Too good to be true. And so you just got to have faith and belief in the math more than anything else, because the math is the numbers that do all the work. Right? Is the human, all you're going to do, your only manual move is to push money from checking account to line of credit. That's the only manual move if it's set up right. Right? And set up right is at the back end getting bill pay, so it's automated, getting the HELOC and the checking account to talk to each other. That's really important too. And so again, that's why I'm the wingman, because I've been sourcing this stuff out for 20 years. I know who to go to, who to stay away from. Now, to your question on the banks, I've never asked anybody's permission to do this. I don't need their permission. Nobody needs their permission, because all you're doing is moving your money from a checking account to a line of credit and back to the checking account to pay bills. You don't have to, they don't need any part of this. They're just there to get you the line of credit, provide you a checking account and an online platform to pay your bills. I've actually had TD Bank, big bank out in the East.
Yep.
They called us and asked us not to send them any more customers. We sent them a lawyer, right, with an $800,000 mortgage, and they asked us not to send them any more business. You know what we did? We laughed at them. Said, how are you going to know if I'm there or not? Right? And when it comes to regulations and all that, nobody can do anything to you.
Yeah.
And what I don't provide loans. I don't provide software. I don't provide anything like that. It's education. I'm just transferring what's in my head to your head, and it can travel with you the rest of your life.
Yeah. Well, it's
education.
Wow.
Right. So it's not just on one house. You get to take it with you forever. Whether you're looking at investments, you're looking at buying a car, anything. You always have it in your head. And again, back to that formula, balance divided by surplus equals payoff. And more importantly than this, and the people we're talking to right now, we have to get after their kids. Right? Because if these kids, if adults today showed their kids their finances, most kids would probably say, show me how not to do this. You know what I'm saying? I mean, a lot of the younger folks, they're saying they don't want to buy homes. They don't want to play in this game because they've watched their parents struggle and struggle and struggle. Well, there's nothing wrong with their parents. Their parents haven't done anything. It's the business model of banking and borrowing that we've been following for decades, right? That's causing the problem. And if you think about how we've been doing things, it's all an experiment. This whole credit thing is only about 35, 40 years old. In fact, it's yours and my generation that kickstarted it, because your parents and my parents' credit was not a big deal. They didn't have a pocket full of cards. Guaranteed.
That's true.
You know, the credit game really got kickstarted in the 80s and the 90s. So what are we dealing with now? Well, it's the end result of an experiment that nobody knew how it was going to end up. You know, being able to extend credit to people is easy. And there's trillions and trillions of dollars waiting to be lent. I'm sure you get it constantly. Every day, you probably at least get 3 to 4 offers of money to lend you. You know, and so obtaining credit is easy. And this experiment is proving, in my opinion, the credit experiment of banking and borrowing today, it's proving itself out. It's unsustainable. Adding payment after payment after payment after payment. And it's the interest rates aren't a problem. That's only dictating the cost. And the small percentage of people that don't get loans anymore because that high interest rate disqualified them because of their debt to income ratio. Right. So the interest rate isn't the focal point. It's just got, what's the word I'm looking for? It's just got nasty side effects. That's all it really does. But the interest rate does not dictate terms of repayment. It just dictates cost. And you can control the balance costs you the money. So if you can control the balance, you can control the cost. If you can control the repayment, you control the overall cost. And if you do it like the big boys do, then you can have a life like the big boys.
It's very interesting. So, Bill, when people go to truthandequity.com, you mentioned a little bit about they can set up a time, Zoom call with you. What are then the next steps? And how do people say, you know what, I want to learn more about Truth and Equity?
If you want to learn more, go to the website, go to the Contact Us page, and you'll find a link to my calendar, and you'll find my personal cell number. Or you can just input your information, your contact info, and I'll send you an ebook so you can get some of this in visuals. And if you land in my system, you'll be hearing from us. Right? Because I like to start off with an initial phone call, because this is not a sales process. This is a let's get to know each other process to see if we can even become friends. So that first initial phone call, 20 minutes, 30 minutes, just get to know each other. And then we move on to that online meeting so we can get the numbers into the system. And more often than not, I'm going to get your numbers during the initial phone call, and I'll do all that work for people, because it's a lot easier for me to do that than have anybody else do it. And then we'll get online together. And then through that analysis, if you're a good candidate, I'll extend an offer. And if you want me to hire me, then I will help facilitate the loan process. I'm not a bank. I'm not a broker. I don't get paid for that. In fact, I do that for free. So I'll help facilitate the loan process. Once the loan is in play, that's when my real job kicks in, teaching and training. And so at that point, that's when the implementation process starts. And that's when I get closer to you versus farther away. You've ever done a mortgage, sign the deal. Where's the mortgage broker? He's gone. He's off looking for somebody else. With me, I'm calling. Where are you? Where are you? Where are you? So through that implementation process, first implementation meeting, you'll walk away with some homework assignments. And this is all part of establishing bill payday for the most part. And then once we're up and running, then this is the most important part of my service. 6-month performance guarantee. Through that guarantee, I have my students send me their line of credit statement so I can track and manage their progress for them. And then we have performance review meetings. At the end of 6 months, if I don't show up for performance review meetings, you're guaranteed a refund for my laziness. If after 6 months, the program is not working as prescribed and you're doing everything I'm telling you, you will get your money back, guaranteed. So it's a two-edged guarantee. I got to do my job and the program's got to do its job. And I'll let everybody know I've given 3 refunds in 19 years. And those 3 refunds were because I had employees that took money from people they shouldn't have taken money from. an 83-year-old man, for example. I had somebody take money from an 83-year-old. I fired the employee and I gave that guy his money back within 48 hours.
Yeah.
But no refunds on lack of performance. Now, at the end of 6 months, it does not end our relationship. It just changes the month to month, right? Because everybody is at a different level. I got people that quit sending me statements after 3 months. They were happy. I got a guy in Wisconsin that sent me every statement for the last 7 years. Right. And that's fine with me because I like seeing that.
Yeah.
I like people keeping in touch with me, but you're under no obligation after that. But just know you paid for a lifetime retainer. So 2 years, 3 years. I had a guy call me. He's been with us for 12 years or 10 years. And he called back just saying, hey, my line of credit's closing up. Where should I go for a new one? Right. So my personal cell number is in everybody's phone. So I'm available Sunday through Sunday. So that's what you get out of me as the wingman, right?
Yeah.
You pay me, you put your trust and faith in me from day one. I've got your back. Well, until we both quit breathing.
Yeah, well, there you go. And hopefully that's not for a while. Let's hope.
Yeah. I'm 60. I figure I got at least 30 more years left in me. So.
Oh, there you go. Yeah.
I come from good blood.
Yeah, man. I mean, I don't even want to think about that far. I'll just make it till tomorrow and I'll be fine. Yeah. Make it to through the next golf round and I'll be fine.
There you go.
Bill, it's been a pleasure. Everybody, again, Bill Westrom, co-founder, CEO of treadmill.com. Check it out. This is the first time that all of us have been just mind blown for this type of thing. We've been in that rut, because this is what we've been taught for so many years. This is a new way to take control of your life. Check it out again, truthandequity.com. Bill, it's been a pleasure. Thank you so much for talking to us about this, I guess, new concept, but you've been doing it for 20 some years. So it's new to us and not to you.
Yep. It's been around a while. And you said earlier in the green room, you're never too old to learn. Never quit learning, man, ever. And the more you know about what you're doing, the more you're going to get out of it.
That's right. Yeah. Bill, have a wonderful day, and we'll talk soon. Take care.
Thanks, Mike.